Don't know how to read candlesticks? You might be in for a surprise. Hi, I'm Michael from Olympia, and I'm about to explain candlesticks to you. Give me 5 minutes and you'll know everything you need to know. Candlestick charts. To most people, they look like some kind of secret code. Walls of little red and green boxes with lines sticking out of them. Here's the truth. A candlestick is one of the simplest ideas in all of trading. It's a picture of a fight between buyers versus sellers over one slice of time. In the next few minutes, I'm going to teach you how to read that fight on real charts. No jargon, no mysticism. Let's go to the fights. First, where did these candlesticks even come from? Because it tells you what they're for. Candlesticks were invented in the 18th century Japan by rice traders. They weren't tracking just the price of rice, they were tracking momentum. Who was winning and how badly? Each candle you're looking at here packs an entire session into one shape. Where price opened, where price closed, and every extreme in between. That's the edge over a plain line chart. A line only tells you where price ended up. A candle tells you the whole story of how it got there, the struggle, not just the finish line. So let's take one candle apart. Every candle has two pieces. The thick middle part is called the body. That's the distance between where price opened and where it closed. Then those thin lines poking out the top and the bottom are called wicks. Some people call them shadows. And they mark the highest and lowest the price got touched during the session. Color tells you who won. Green means price closed higher than it opened. So buyers won that round. Red means it closed lower, and sellers won that round. Body, wick, green, red, that's the whole alphabet. Now, hidden inside that one shape are four separate prices, and traders call them OHLC. Open, where the session started. High, the very tip of the upper wick, the highest price anyone was willing to pay. Low, the bottom of the lower wick, the lowest it traded in the whole session. And close, where it finally settled when the time frame ended. Open, high, low, close. Once those four click for you, you can read any candle on any time frame, a 1 minute chart or a monthly one. It's exactly the same language. Okay, now the patterns people actually care about, the ones that hint a trend is about to turn up. 3 to know. First, the hammer, a small body with a long lower wick, at least twice the size of the body. That long tail means sellers shoved price way down, and buyers came in and slammed it right back up. Second, the bullish engulfing, 2 candles, where a big green body completely swallows the little red one before it. That's momentum, flipping hard. Sellers, the buyers, right in front of you. And third, the morning star, 3 candles, a long red one, a small hesitant one, then a strong green one. A classic sign a bottom is forming. Look at Salesforce here. Down at its low, you can see the hammer and then the engulfing right at the bottom. And I don't want you to just take my word that these patterns matter. Look at what actually happened. This is Salesforce, a real name off the Olympia board. Those bullish reversals I just showed you fired right at the 155 level, a spot that mattered. And from there, it ran about $179. I'm not giving you a made-up win rate. I'm showing you the chart. The setup showed up at a level, and the move followed. That's the whole point. Now flip it over. Same ideas for the downside. The sell signals. First, the shooting star. A small body with a long wick on the top. Buyers tried to push price up. Sellers rejected it hard, drove it back down before the close. It's the hammer, but it's upside down. Second, bearish engulfing. A big red body that swallows the green one before it. And third, Evening star, long green, small, indecisive candle, then a deep red one. Top of the market version of the morning star. Look at form factor here. Roll over from its high. That's what distribution looks like. And here's the other side of the coin. Again, straight off the chart. Form factor rolled over from about $116. And notice, no bullish reversal ever held. No hammer at a level that's stuck. Nothing to stop bleeding. So it just kept going all the way down to around 85. Same tools, opposite outcome. When the bearish pattern shows up and nothing steps in to defend a level, that red candle just keeps printing. Not every candle is a winner or a loser, though. Some are a stalemate, and those are worth knowing too. The first is the doji. The open and the close are almost exactly the same, so it looks like a little cross or a plus sign. That's a dead even fight. Buyers and sellers locked up, nobody in control. The second is the spinning top, a tiny body with long wicks on both sides. Lots of movement, lots of arguing, no winner. On their own, these don't mean much. But when one shows up after a long, hard run in one direction, that's the market catching its breath. And sometimes that's the last breath before it turns. And this is the most important slide in the whole lesson. So stay with me. Patterns do not work in a vacuum. 3 rules. Rule 1, location. A hammer in the middle of nowhere is noise. That exact same hammer sitting on a real level like Salesforce at 155 is a signal. Location is everything. Rule number 2, volume. When a reversal candle prints on high volume, that's real money confirming the move. On light volume, it's usually a fake out. And rule number 3, wait for the close. Never, ever trade a candle that's still forming, because the entire story can flip in the last few seconds before the time frame ends. Location, volume, and patience. That's what separates people who use candlesticks from people who get chopped up by them and wear the wax at the beginning of the video. So let's wrap up the fight. You know how to read the body and the wicks, the 4 prices in every candle, the bullish and the bearish reversals, the indecision candles, and the one rule that ties it all together, context. That's the language. It's not magic. It's just a picture of a fight. And now you can read it. If you want the rest of this, the levels, the signal, all of it, come by and check out the free lessons at olympiacutrade.com/learning. I'll see you there, and I'd love to hear from you.